Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, checking in on the market. So the bulls showed up today with a solid open, broke the high of yesterday, and we were on our way to closing strong. We know at 3:50 p.m. on the dot, the algos kick in, and this is what they did at the end of the day today. Big spike, big dump. And we'll look at that on the 15-minute time frame on the futures chart in just a second, but what that leaves us with is pretty much just some hourly consolidation into the close. So what I care about in the short term, what is most important for me in the next 2 to 3 days, obviously if SPY were to fail to break the high of the bounce of 287.30 and then drop down and break our low of yesterday, 272, I would then consider us in a daily downtrend, with that being a lower high and lower low. For me, that would also be a very convincing sign that weekly consolidation is then underway on the S&P 500. The number two thing that I am watching is XLF and this tightening daily range, because same thing, if XLF breaks this support of 2106, we are then in a daily downtrend, and we will very convincingly be rejecting with a weekly lower high being set. And number three, IWM doing the same thing, tightening daily equilibrium. How this breaks is going to be important. They are likely to break before we get our next round of tech sector earnings. Netflix yesterday, no one else that I really care about in the tech sector until next week, which means a few more trading days without that being an impact. So the S&P 500 chart that we are watching, we've been keeping an eye on the 12-hour time frame, the futures chart, and we're watching for a 12-hour lower high to form. Are we going to straight V-shape to a higher high, or are we going to set a 12-hour lower high and lower low to confirm the downtrend? We were in a 12-hour uptrend. We lost the uptrend. Are we going to confirm a downtrend is what we're watching for. Overnight tonight, I'd be expecting some consolidation. We haven't changed the 4-hour trend. We saw a significant bounce, but it was coming off of the low. All day I was watching this 15-minute rising wedge. And right at the end of the day, those bot trading shenanigans triggered a bull break straight into a bear break, and here we are right at that level. This rising wedge convincingly breaking bearish would tell me 4-hour consolidation was underway to look for a 4-hour higher low to form compared to the bottom of 27.23. So we're going to go through all these names, but SPY 272 is the most important. IWM daily equilibrium, XLF base of support. Do those names enter daily downtrends, or can they hold the daily higher lows? So for IWM bulls to prove something to us, they have to break 122.72 to keep control. Burden to prove short term overall is definitely on the bears. They have to break 116.48 and 114.56 for our weekly lower high to be set and for consolidation on the weekly time frame to then be underway. XLF, all about 2106. Anything under 22.52, just a daily low or high. QQQ bulls, can we break 216.51 and keep this move going? Daily higher low has now been set, and that is 203.63. Bulls have to break 216.51 for continuation. If we fail to break resistance and then drop down, just like SPY, we will be in a daily downtrend. So pretty much IWM and XLF are very similar. SPY and QQQ are very similar, and that has to do with holdings. SPY has a lot of tech sector holdings. QQQ, mostly tech sector. XLF, or IWM, has a lot of financial sector holdings. XLV, looking for a daily higher low to form, and this chart has not updated. So looking for a daily higher low to form, we broke the high of yesterday, so daily higher low is now 96.62. XLV is more in line with QQQ and SPY. Are we going to form a lower high compared to 101.41 and then drop down and break 96.62 to then be in a daily downtrend? Or can bulls keep this daily uptrend going? And we would need to see another 3.5+% to see continuation on the daily time frame from here. Biotech sector, multiple daily inside bars. Did not break at the end of the day, but we came close. So tight range. If the inside bars break bearish under 92.14, we look for a daily higher low with plenty of space. And if the inside bar breaks bullish, we look to the top of 96.83. Definitely one of the stronger sectors over the last 5 days, keeping control for now, and not really in the picture as far as looking for market guidance in the next few days. It's all about everybody else that we just looked at. SMH, same as QQQ and SPY and XLV. Are we going to form a lower high compared to 133.95? Most important support would then be 122.78 from there. Or can bulls just right quick break 133.95 and regain complete control? Solid bull day today, absolutely. But have to get over the top of this move. TLT. Profit taking on a, nope, that's not updated either. So pullback, the most important line in the sand level, 167.27, to keep these higher lows. If that level breaks, this chart is going to lose a whole bunch of clarity for me. The only thing that's clear is that little higher low and the higher high, but we're pulling right back down towards that support of 167.27. So if 167.27 breaks, it becomes unclear. When a chart becomes unclear to me, I don't trade it. You know how many charts there are out there? There's a lot. And if something's unclear, I guarantee for every unclear chart, there's a clear chart out there as far as whatever your niche is, whatever your edge is as a trader. So if you like daily uptrends and you like buying daily higher lows on hourly trend changes, if TLT breaks 167.27, it's no longer in a daily uptrend. There's plenty of names that are. So that is encouragement to, if a chart is unclear and you're not sure where the short-term direction is going, trade something else. Or just wait until it is clear. The VIX on the daily time frame, we had our resistance. Short-term, TradingView is not cooperating today. So we had our resistance short-term at the high of yesterday. We have rejected. At this point, it's a little higher low and higher high with no convincing follow-through, which means, could this be a weekly bear flag? And the answer is absolutely, that is possible. We have to see 37.60 hold, and bulls then have to break 47.80 to see continuation of this little bounce attempt. But as of right now, the bull break on the daily, straight into a solid pullback, is setting up for the potential of a weekly bear flag. And of course, the S&P 500 and all these sectors breaking bullish would increase those odds. Gold is also looking strong. So gold has given us a daily higher low, very convincingly. So with my long-term GLD position, speaking of which, I exited the 40%. So just to recap, went short Monday, swung it, exited 60% Tuesday, exited 40% today. So locked in those gains, gave a little bit back of that 40%, but at that point, that 40% position size, pretty insignificant for me overall. In a GLD long-term swing position after re-entering, let's see, I sold May 9th or March 9th and March 10th after December entry, patiently waited, re-entered April 1st, and now I'm just walking up my stop. So I'm walking up my GLD stop and using 1661 on gold as my new stop level. When the daily uptrend is lost on gold, I will exit my longer-term GLD swing. And of course, I have my SPY, no touch, multiple decade position that I scaled into on the way down with an average in the 240s. So gold, daily higher low is set, and we're looking right back up at 1748. And if we break that level, that'll be new 9-year highs or whatever it is, and this move will continue as long as the daily uptrend is intact. That being said, we have to be keeping an eye on the dollar, and the gold bulls are loving that close. They're up at the high of the day, and look at the dollar. The dollar is just fine for these bulls. all about 193. Best case for gold bulls, reject from 193 and see a couple red days because they are not being slowed down by dollar strength, and dollar weakness will only help the gold bulls. So for gold, it remains all about that resistance, the highest price we've seen. We would have to fail and then drop down and break 1661 to lose the daily uptrend from here. Silver, not quite as strong. Daily inside bar, we're not convinced our daily high or low has been set on silver. I would need to see this inside bar break bullish, then we would say the daily support is set. But if we look at XAU, XAG, who's stronger, gold or silver? We'll look at that bull break yesterday on this chart, and what that tells me is our weekly high or low is set. High, low, higher low, keeping a strong daily up or strong weekly uptrend. I would be watching for a weekly lower high compared to 128.69. I anticipate the most likely scenario on watching the gold silver comparison is a weekly equilibrium into May, probably late May. And how that breaks is going to have significant short-term implications as to which name bulls and bears should be playing, whether it's gold or silver. So as of right now, because the weekly high or low is set, I would much rather be in gold than silver because of the weekly uptrend, which is why I am. All right, where are we going now? We're going to miners, big bull break. Remember the 4-hour equilibrium on GDX. Perfect rejection to the penny. Perfect bounce off support to the penny. And a big bull break today, and the best kind of bull break because it's very convincing. We don't break one equilibrium level and then putter around and leave doubt. We break all levels. So all levels have broken, and we're now at 7-year plus highs on GDX. I was looking for the next resistance level on GDX. Now that we're at 3264, I got to go back to 2013, and there's a gap in the 34s from 2014 or 2013 to be watching. And it's probably on the daily chart to see that gap. We're not going to find it here. But there's a gap in the 34s from 2013. That's the next level. Anything on the daily time frame above 29.55 is a daily high or low, keeping bulls in complete control. So here's a scenario where the miners are now leading gold. Gold is not hitting higher highs. The miners are. Why? Because gold had a really strong day and SPY had a really strong day. Keep in mind that the miners are impacted by gold and the market. Best case for bulls is when both are going up, and that was today. So very significant bull break. And look at the junior miners, GDXJ. How do they look? Comparative to the senior miners, nowhere close. We have to go another 3% to get to short-term resistance. We got to go 15% to get to the high of 2020, while GDX is at 7-year highs already. Silver is weaker than gold. I do believe, fundamentally speaking, the junior miners have more exposure to silver than the senior miners do, which have more exposure to gold. That would make sense because the silver weekly chart is nowhere near as strong as the gold weekly chart. Oil. So US oil tracking the June contract has changed the hourly trend. Higher low and higher high on the inventory report today, and a base of support being established at 1355. So 1355 is the most important support, 1621 is the most important resistance. Looking at USO, USO is daily inside bar, but we closed at the low of the day. I believe we have a reverse split coming in a few days, maybe Monday, the 26th, I think. 8-for-1 reverse split to try and keep afloat. And they keep shuffling around how they're calculating USO. We have less weight in the front month contract and more weight further out to try and combat the contango. So, hourly is a very clear downtrend. We had a high at 340, a lower high at 308, a lower high at 294. Anything under 294 is just a lower high. Bulls are not showing us anything on USO. If I were trading oil, the only thing I would be doing on USO is day trading, and I'm not doing this. I am very comfortable trading and very comfortable with technical analysis, and I'm still staying away from USO and oil right now. That doesn't mean you have to, but I would say you want at least 5+ years experience at a minimum to even consider trading oil right now. I've got 9 years, 10 years, and I'm not. So we've got USO. The only way that I'd be day trading it is bottom fishing and top fishing. 250, clear base of support. Big bounce to 262, held support by a penny. If I place a bid at 251 and I put a stop at 249, I'm risking 2 pennies. Let's say I do 1,000 shares or 10,000 shares. So I'm risking $200 if I get stopped out. And we end up bouncing. And I could end up potentially locking in $500 or $700 or $900. That's the only way I'd be trading it. Top fishing and bottom fishing, tight ranges with clearly defined stops. And if I am not disciplined enough to be having stops, I wouldn't be anywhere near trading oil. Natural gas, very healthy consolidation. The inventory report tomorrow is going to determine whether we head to test 2 and 203 on a bull reaction or whether we look for a daily higher low to form compared to 153 on a bearish reaction. But overall, nice recovery. Significant 4-hour pullback, but a solid bounce from that pullback. So inventory report for natural gas will be key tomorrow. That's where we stand in the market as a whole. IWM, XLF, close watch. Can they hold the daily higher lows is the question. Congrats to the gold bulls. I'm out of new content. So we'll reattach a financial mindset video from a few months ago, and I'll get out there recording in the yard over the next few days. Have a good rest of your day. Hey everyone, so in this video I want to be talking a little bit about financial mindset. As traders, we're always in this mindset of wanting to accrue capital and wanting to make money, also not wanting to lose money, but there's a whole different mindset out there that goes along with bigger picture stuff in terms of financial independence and financial well-being. And that relates to expenses, opportunity cost, and things along those lines. So I personally have always been fairly financially conservative. I have fond memories of eating cold cans of soup while living out of my beat-up Honda Civic, traveling around the country, and doing so on a budget that was less than I would have been paying if I was living somewhere paying rent. But it boils down to, you hear all the examples of, if you forego a cup of coffee a day and save this much money. A rough example of that would be if you have a $4 cup of coffee, you have it 3 times a week, and if you eliminate that, you just saved a significant amount of money. Let's just say you had a $20,000 trading account, and to make 10% on the year and match the S&P 500, that's $2,000. If I cut out that 3 times a week coffee, I just saved $620, and that is essentially a 3% increase. It would be equivalent to the amount of money in my pocket is a 3% increase in my account. So we can view it that way as well. Not only is how much of your account making, but how much money is in your pocket. So I could choose to have a new car. Back when I was seeing my capital increase significantly with the cryptocurrency space and then the marijuana sector a few years ago, I continued driving the same beat up 10-year-old $7,000 used Subaru because it worked fine and it served all of my needs, and I didn't need to up that. And that new $30,000 car is the equivalent to, say, going out to eat 600 times over the next 5 years. So again, have that mindset of opportunity cost. I could buy this. What else could that money go towards? I talk about monitors. You see thousands of dollars spent on monitors in these big elaborate systems. Personally, I've never found the need for that with any of my trading. I've always spent $120 on or less on my monitors, and I've had maybe 4 in my trading career. So I currently have 2 $120 monitors, and let's say the alternative is a $2,000 setup. Me foregoing that $2,000 setup, if I put the money that I saved, let's say $1,750 in an account that just tracks the market for the next 3 decades until my IRA reaches an age where I can withdraw from it, that's now $49,000 as opposed to a $2,000 expense. So again, view it as money in your pocket, not necessarily just all the money that you can bring in, but money you can prevent from going out and keeping that frugal lifestyle, because you see so many athletes that keep this elaborate lifestyle up and then their money stops coming in, and next thing you know, they're broke because they can't keep up with it. It's much easier to ride the waves of income if you are not having high expenses and don't have high debt. So that's today's little financial tip. Hope you have a good weekend. two major factors as well. So I personally, you guys, you can't be going this loud.